Hello everybody, we're going to be going over precision swing points in today's video and how we can identify them and what they do in the markets. As you can see, this is NQ and this is ES. What are precision swing points? First, we need to understand what cracking correlations are. Cracking correlations are differences between two assets, NQ and ES. So before watching this vid, I do highly recommend watching my video on S&Ts. They can help you figure out what cracking correlations are. Cracking correlations are differences between two assets, and they can give us a lot of information on the market and how the market's going to move after a cracking correlation that we see. And on the first slide, we see a 3-candle formation, like right here. This is the picture from the first slide. And we see that we have NQ on the left and ES on the right. Now, a swing point is obviously, first one is for a bullish scenario. This is a bullish precision swing point. We see a bullish candle, a bearish candle, and then a bearish candle. But for the middle, it can be any color. The first has to be an up close, and the third has to be a down close. I did make a video on that on the market structure, or just the basics to trading. But we have this, you don't need to know, like, the colors don't have to be exactly the same, but it has to be a swing, like in this direction. Now, what makes this a precision swing point? The second candle of that 3-candle formation has to be a different color. As we can see, right here we have a red candle, and right here we have a green candle, making this a precision swing point. The second candle of the swing point information has to be a different color, bearish / bullish. And this is what makes it a precision swing point rather than a normal swing point, a swing high or swing low, this being a bullish scenario. Now, how can we use precision swing points? We can use precision swing points to find reversals when paired up with other confluences, such as PD arrays, premium discount, everything other than that. Now it's time to look into chart examples. Everybody, we're going to be going over precision swing points and how we can use them in the market. Now, first thing that we see is I'm going to give you guys a little tip to better your entries on precision swing points. How I use precision swing points for me is I know it's a 3-candle formation, but on the second candle, that's really all you need to know about the swing point. Like, so for example, I don't wait for the third one to form, I wait for the second one to form, and then that helps me anticipate that price is going to push in the direction of that precision swing point. Okay. Now, what do we see prior to this precision swing point being made? I see that we have previous day high and relative equal highs waiting to be swept out. So we have a lot of buy side liquidity up here. That could be our drawn liquidity, like, and there. Now, on the 15-minute time frame, what else do we see? These last 3 down close candles before a move higher, creating this 15-minute order block that has the consequent encroachment, the 50% line. We tap that 50% line, and then on the 5-minute, we have this candle. Now, this is not any ordinary candle. This is the second candle of our precision swing point formation. Now, we can look on ES, and what do we see? Oh, the candle that created that is the second candle of the swing point is bullish on ES, but on NQ, going to switch back, it's bearish. So I can anticipate that price from this point is going to push higher to previous day high. That's what I'm going to guess, okay? Oh, sorry. I'm going to guess that price is going to push way higher to previous day high because we have an order block on the 15-minute on the higher time frame. We have a drawn liquidity, which is relative equal highs and previous day high, time-based liquidity, and engineered liquidity. And since the second candle was different, I'm going to guess that price is going to push higher. And you can also use persistent swing points to check for SMT. I actually didn't check before making this video, so that's on me. But what we can see, in a minute. Sorry guys, I'm just looking for an SMT really quick. This low, 955, yes. 955. Yep, and we do have an SMT. Although we should use sequential SMT. I'm going to use just a normal SMT for the sake of this video, although this might be a sequential SMT. But at 955, this low was created. And what do we see? An order block. And we didn't take out this low right here, creating this SMT that we have. On the 5-minute, so we're going to call it a 90 cycle. But if we pull up our, I thought I had a quarterly indicator, but it's quarterly. Oh, okay. Well, for the sake of the video, let's just say this, since that low was on the 5-minute, let's say it's a 90-minute cycle, 90-minute cycle sequential SMT. Now that I have a clear drawn liquidity, higher time frame PD arrays to back up my entry, and my entry trigger, which is a precision swing point, and then a sequential SMT, I can say that price is going to move to previous day high or my drawn liquidity. And what do we see? If we can get there. Wow, okay. Well, what do we see then? Price makes its way to our take profit and takes out previous day high. Like that. And this is how you can use precision swing points, and this is a bullish precision swing point. In the next clip, in the next chart example, I'm going to be showing you a bearish precision swing. Hello everybody, this is our second number 2 chart example and our last one. Now let's actually do some context. Let's see what the market is telling us as of right now. What do we see? We see that we have created this big wick to the left, right here, the one I'm pointing at, and this is a rejection block. Now, what can we do? Drag it out. Oh, price just tapped the consequent encroachment of that rejection block. Now we can be looking bearish. But what else do we have? On sell side, we have these relative equal lows. Super nice relative equal lows that have been created for us to say that price could be moving bearish. Now, looking into our entry triggers, what do we see? We already have our PD array to say that price is going to push lower. We already have our drawn liquidity that says this is a good place for price to target if we push lower. Now let's see why we should enter here instead of not at that CE. Well, let's see. We're on ES right now. And what are we going to do? Switch over to NQ since they are correlated pairs. And what do we see? Oh, look at that. Would you look at that? We have this candle. And what else do we have? An SMT. Right there. Because why? Price took out this 845 high, this high at 845, and ES did not. So when we go back, we know that we have that second candle of that precision swing point created right here, right there, and then we have an SMT right here between these two, because ES didn't take out this high, but NQ did. And if we look on the 15 minute, it's still visible. 1 hour, it's still visible. 4 hour, it's a swing divergence. So what can we say? You could say, if I get rid of one of these and go into quarterly theory by 2 degrees, you can say that there is a sequential SMT on the daily cycle, on the 15 minute. That's what, okay. Let me go. Oh, I don't even know I had that, but we have a daily cycle sequential SMT on here. So we have another indication that price is going to push lower. Ooh, now we have we have a very clear sight. We have a precision swing point, our entry trigger, a PD ray, our rejection block, and a cracking correlation. We have two. Well, our PSP, our daily cycle sequential SMT, and our rejection block right here, and then relative equal lows. So we know where price is going to go to. We know what price is rejected. We know that we have a cracking correlation. Why don't we enter on that right there? And then we put our stop at this high. Well, wouldn't it be right there? Yep. And then we target these lows for a crazy 1 to 40 risk to reward. Now let's put our stop loss. We're losing on one ES contract. We're losing $62. And then let's see how this plays out. And you can get a take profit since there's a little trading view glitch. And what do we see? Price comes down, takes out those relative equal lows, and we get a beautiful trade for a 1 to 40 RR trade that we lose 1 point on, and we can get a short of 50 points, and we bring home those 50 points. It's pretty simple. And also something that I don't think I mentioned was that precision swing points are usually, how I use them is to confirm sequential SMT. But as of recording this video, I have not gone over sequential SMT. I don't know why. I definitely should have started with sequential SMT. And I definitely should have started with introducing quarterly theory in general. But that's my fault. And I will get to making those videos. So just if you haven't watched sequential SMT, if I haven't made it yet, then definitely hold off on this video and wait for that to come out, or watch it first. But this is a bearish example of a precision swing point. And for also something else, I don't know what it is for Forex, but I can actually just see right now. Wait. Euro and okay, you can use literally Euro USD with Great British Pound USD, Euro JPY and GDP JPY. I'm not too familiar in Forex, but I do know that what is his name? TGR has also talked about SMT with Euro and Great British Pound, so you should use that if you're trading Euro or GBP. I know Omar uses Great British Pound, but yeah, that's all I have for this video, those two chart examples. And for homework, I want you guys to find me 2 precision swing points and a picture, at least, of the, what is it called, the 2 pairs. And tell me, well, just find me 2 precision swing points and tell me what pairs you found them on. And that's it for this video. And yeah, let's see you guys next time.